Alright people, welcome back to the channel. In this video, I'm going to talk about order flow. So with those of you that follow me on this channel and those of you that know how I trade, you already know that my key point of entries or the level that I like to pay attention to is the order flow. I like to take my entries from the order flow, alright? And most of you have been requesting in the comment section that I please talk about order flow. So in this video, I'm going to break down order flow. I'm going to talk about what an order flow is, how to identify an order flow on the chart, and then the criteria to actually check for a valid order flow, because it is not all order flow that is valid. We're trading in a liquid market and a lot of things are there to confuse those of us who are traders, to actually put us in a trap. So I'm going to show us the criteria to actually stay away from marking or identifying the wrong order flow. So please make sure you stick to the end. For those of us that are new to the channel, please don't forget to subscribe. If you like the video, don't forget to leave us a thumbs up and please say your comments in the comment section. Not wasting much of our time, let's get started. So guys, order flow, I'm sure that you have come across a lot of people talking about order flow, a lot of traders, and especially here on YouTube, trying to define and explain what order flow is. Okay, so order flow has kind of like two parts attached to it. Order flow has a fundamental part and it has technical part, which is on the chart. Okay, so we are going to be focusing in this video, we're going to be focusing on the technical part, how to identify all of the data on the chart. Okay, so we will not be dealing with the fundamental parts that have to do with the numbers and actually checking to see how many orders are there on the chart, like something like this. We're not going to be focusing on that. We're going to be solely looking at the chart to identify how is order flow being displayed on the graphical chart, which we actually implement our strategies. Right, let's hop on the chart and let's make your entry better. All right guys, so before I get on the chart, I want us to understand that those of us that are totally new to smart money concept, this video is kind of like a little bit intermediate. Okay, so if you are totally new to smart money or you are trying to learn the system and you are yet to actually grab the other concept that I'll be mentioning in the video, please look in the link in the description and contact me. I'll be happy to walk you through on a one-on-one basis. Let's get started. So you can see that technically the definition of order flow, technically these are represented on the chart as the opposing momentum in a trend, or the pullbacks or retracement phases of a trend or an impulse are referred to as the order flow. Just like the definition say, I think that is very, very literal, right? The opposing momentum in a trend. So when you have an uptrend, right, meaning we are going to be having impulsive momentum and what retractive momentum, right? Retracement to the downside. And we're going to be having impulsive momentum like so for what? For our uptrend. So the definition here said the represented at the opposite momentum in the trend. So the opposite momentum in an uptrend is always the retracement phases, right? So the retracement section here is an order flow. The retracement section here is an order flow. The retracement section here is an order flow. All right. So if you want to literally look at the word order flow, it's like the flow of orders. In what direction is the order flowing? All right. So if an order is just pushing up, it's not really a defined trend. What defines the trend is the fact that it actually has this retracement to the downside and then give us more impulsive pushes that creating rival point. That is the retracement level that give us that confirmation that this is an uptrend, this is a downtrend. All right. So like the downtrend as well, it's also the same stuff. We have what downtrend creating what impulsive bearish movement, and then the retracement movement are what the little bullish movement. So this is our order flow, and then this is also our order flow. All right, now where we get to filter our entry from. All right, now let's look at this particular stuff. You can see that if we are to filter our entry from these particular order flows, like if we are to actually take the entries from this particular movement, if we are looking at price direction, it's going to be really huge for the risk. If we take our, let's say we're taking our risk from the pullback here, if after defining your structure, right? If you're taking your entry here and looking for price to pull back, of course it will most likely pull back into it, and if your capital can hold, it will not come to take you out. It will find something and then play out, right? But then this is too much. This is like too much for our risk appetite, because what I'm defining, like I said, trend, it means that this is done on our higher time frame. This is done on a directional bias time frame. All right, so if you are taking the trade directly on a directional bias time frame, for those of us that trade that look at the higher time frame for direction, then the risk is going to be too much for us to bear. All right, so that is what brings us to this particular definition here. The pullback or retracement phases or an impulse. Now, for those of us, that's why I said from the beginning that this particular video is not for those people who are totally new to this stuff or to smart money or to trading itself. You have to understand the basics of trading before you actually come to look at this order flow video. So if you are here to understand trading properly, look in the link in the description and then you can contact me. For those of us that already understand structure, we know that every impulse have little pullbacks on it, because every impulse on a higher time frame is a defined trend on a lower time frame. So this little impulsive phase, like so, this impulsive phase on a higher time frame is like little uptrend in a lower time frame. So if this is a 5 minute, this will be a little uptrend on the 1 minute, okay? And if this retracement is on the 5 minute, this will be a little downtrend on the 1 minute, okay? So that's why if you switch on your 5 minute time frame, you're going to see pullbacks on an impulse. So if we have an impulse like so to the upside, right, you're going to see little pullbacks on that impulse, and then you see pullbacks and like so, all right? So all of these pullbacks, they are also order flows, all right? All of these pullbacks here on this particular impulsive phase, this is an order flow, this is an order flow. Anything opposing the momentum of where price is facing is an order flow. It's either going to be on the impulsive phase or the whole trend, all right? Now that is for the definition of an order flow. Now let's go and filter out. I want us to have this at the back of our mind, because this is where we're going to actually use, this is what I'm going to actually use to filter out the precise entry price range and then the exit price range, all right? So let's look at the criteria to filter these order flows to make sure that we are marking out the valid one for our entry and then the one that is likely to hold price, okay? So criteria for identification. The first criteria for identifying an order flow is that there should be a Breakoff structure. I'm sure this one is something very literal to those of us that trade smart money concept. There should be a Breakoff structure. So if price is pushing like so, you cannot just come and look at only this particular phase and want to look for where price will come and mitigate and then you enter. No. There should be a Breakoff structure before you understand where price is even facing. Before you understand where price is facing, then you can get to understand where to actually look at for your order flow or for other point of interest, right? So there should be a Breakoff structure. So we should be able to identify a trend. That is what it means, that there should be a Breakoff structure. So if we are broken to the upside, we know we are in an uptrend. If we broke to the downside, we know we are in a downtrend, okay? So that way we get to understand which type of order flow to look for, because we have the bearish order flow and then we have the bullish order flow, all right? So the one for the bullish is the one that sponsored the buy, and then the bearish order flow sponsors the sell. So that is the first criteria. There should be a Breakoff structure. So the second criteria said order flow, that's what we call OF. Order flow must be in the right price range. This is when we look at premium and discount. Now I'm sure that those of us that are actually paying attention to this video, we understand, or we have been hearing stuff about buy low and then sell high, all right? You understand? Buy when the price is low and then sell when price is significantly high, so that you will not get caught up, all right? That's how you trade. You cannot be buying when price is high and then be selling when price is already low. You understand? So that is what this premium and discount is all about. Now for me, like I said in the beginning of this video is purely technical, okay? So what I do to actually cater for this particular criteria is to look at the impulse, okay? The last impulse that broke out of the structure, all right? You have to look at half or 50% of that impulsive move before we are having the next significant retracement, all right? So we have to look at the 50% of that impulsive move before we have the major retracement. And for a quick tool that you can use to look at that is the Fibonacci tool. So you can use the Fibonacci from the beginning of that impulse to where you can see the impulse turn around for a retracement phase. So any point of interest, let's say it says must be in the right price range, all right? This price range means if you are looking to sell, price should be higher, all right? And anything that is premium, it means there's price attached to it, then it means the price is high, all right? And anything that is discounted, it means the price is now low, okay? So for this scenario, we're looking for buys, right? Because it's a bullish Breakoff structure here. Since we're looking for buys, we should pay attention to anything that is below half of this particular impulsive phase. So any point of interest or any pullback on this impulse, those pullbacks on this impulse that we have said from the beginning that there are also order flows. So those pullback on this impulse that are going to be below the 50% mark or the 0.5 are the pullback that are going to be paying attention to based on this criteria number 2. So the criteria number 1, there's a Breakoff structure. Criteria number 2, we have to pay attention to pullbacks that are below half of the impulsive phase. You understand? So the next and final criteria is that order flow must have imbalance or fair value gap. All right. Now what this simply means that when you have an order flow, price should not come into it before you look at using it for your entry. You understand? If price have come into it, then it means that that particular order flow is invalid. I'm going to hop on the chart and I'm going to break this thing down bit by bit, identifying them with live market so that we can get to understand all of these things. Okay, now for this one, criteria number 4, it must have imbalance or FVG. Imbalance is simply when something is not mitigated yet, price have not come back into it, so there are orders that are there that are yet to be filled. You understand? So if we are to look at that imbalance criteria, let's say we have an order flow here, right? Then we have another order flow after it, which is what order flows are pullback. We already know that. And then we have another order flow, let's see here, and then we have another order flow here, and like so. All right. Now, if we have all of these order flows, okay, and we say criteria number 3 said it should have imbalance or FVG or not mitigated. Let's just include that for people who want to take note. Not mitigated. And I say the English word mitigation means what? Price coming back into something, price coming back to, tap into that order block. Okay, so let's take out that stuff because we already understand what it's there for. So we have a Breakoff structure, right? This is our Breakoff structure here. Now this is the first order flow that we have. If we are to identify that order flow as our point of interest, we can see that this criteria number 3 has not been met because price have mitigated this order flow. Price went out of the order flow and then came back, creating another order flow here. All right, price created another order flow. So the second order flow here mitigated the first order flow, means there's no imbalance between this order flow and the next order flow. There's no fair value gap between them. All the gap is closed. It is being locked because this order flow have come back to mitigate this order flow, the first order flow. All right, so we have this order flow as one of the order flow that is not mitigated. Then we have this other order flow too, it is not mitigated, and we have this one too as an order flow which is not mitigated. All right guys, so for an order flow to be valid, it needs to meet the whole criteria here. Not even one should be valid, and I'm going to tell you the final criteria when we hop on the chart. Okay, so these are the 3 most important criteria that the order flow must meet. If the order flow doesn't meet these criteria, then it is not a valid order flow, and you should try to take price or take entry from that order flow. You are likely going to be liquidated. All right, let's start from the first criteria. The first criteria should be Breakoff structure, right? So let's uncheck this and then use the criteria to walk through this guy. So the first criteria is what? Price should break structure. So there's a Breakoff structure here. We already see that criteria is met. Second criteria is that the order flow should be what? Within the price range, which is, if it's for buys, it should be in the discounted price. If it's for sales, it should be in the premium price. Okay, so since we are in an uptrend, we're looking for buy trade, right? So price should be in a discounted price. And I said the discounted price and the premium price, you get to identify them by looking at the impulse that broke structure. Then you look at half of the impulsive phase. All right, then you look at anything below the half is the discounted price. Anything above the half is the premium price. Okay, so we are looking for any other flow that is below this particular half level. So let's pull up our fib. Let's pull up our fib 2 from here to here. Now this is the fib setting in case you want to have this particular setting on your own Fibonacci as well. So let's pull up fib, right? Now we say anything below 0.5 is what? The discounted price, and anything above 0.5 is the premium price. So we are looking to pay attention to anything below 0.5. So we have our first order flow here below 0.5. We have this order flow, and then below 0.5 again we have another order flow here. All right, now the final criteria says order flow must have imbalance or FVG or not mitigated. So the order flow must not be mitigated, and I just explained that mitigation means price coming back into the order flow after leaving the order flow. Right, now if you look at this particular order flow here, the first order flow, since price went out, price pulled back, creating another order flow, but then price did not mitigate the order flow. All right, so this very order flow here is valid. But if you look at the other flow, the last order flow at the base, when price broke out of the order flow, right, out of the pullback, create another impulse. When price came back to create the second order flow, price went back into the first order flow, meaning this order flow is not valid. So we are left with this very order flow as our only valid order flow. So this is our valid order flow. Now let me quickly show us something. In a scenario where you can see that this particular order flow is at the 50 mark, is half into the 50 and then half above the 50. If you have no other order flows at the base, let's say there's no other order flow here, it means that yes, you can use this particular order flow as your valid order flow. But if there's any other order flow below it, it means that that particular 50 mark will not hold. All right. So also there are cases where you have more than one order flow that are valid, like it meets all of the criteria. So the first order flow should be your decisional, meaning you should put a little bit of risk, and then the second order flow should be the one that you actually want to focus on. So let's have it like so. You can see that now we have shifted this order flow to be below our 50 mark, meaning it is valid, and then this order flow to checking all of the criteria, it means it is also valid, right? Since it is valid, if price is coming down, you are looking to enter any trade here. This is what we call decisional point of interest or decisional order flow. Price is like 50-50. Price might take it, price might not use it. All right, price might liquidate it. This is now our extreme order flow. Extreme order flow is always high probability order flow. Price is most likely to use this order flow to play out. I hope this is understandable. Now, to keep the video short, this is like for the bearish momentum, it is also just opposite. Okay, so I'm going to go on the chart now, and I'll walk us through the chart, and from there, I'm going to find a bearish example to use so that we don't keep the video too long. I'm going to be using GPUSD to illustrate our scenario of order flow. So we're not going to be using this particular price action here because we want to, make it a live market. I want to be using it. I want to be, playing along price so that you can see it live, how price will be and how you should, interact with price. Okay. So we have this particular structure, and obviously we are seeing that we're in a downtrend from here, but then we have to also wait to confirm from this particular level to see if price breaks the level. Then we can, those of you that trade smart money, you already understand, if price breaks this level, we're looking for continuation to the downside, right? Meaning we're looking for price to pull back to a valid order flow, and then we can continue the sales from the order flow. So what our goal is here is to identify that valid order flow if price breaks through. So let's play price to see if price is going to break through. All right, so we can see price have broken significantly through the level. So we have our Breakoff structure, meaning the first criteria is met. We have a Breakoff structure, right? So after a Breakoff structure, we have to start looking for what our order flow. And we said if we're looking for the order flow, we cannot use the whole of this order flow from here to here because it is too much. All right, this is another flow. So we have to filter into this impulsive phase the valid order flow that is available. Into this impulsive phase, we have to filter into it and look for a valid order flow that is available for us to use so that we can keep our stop loss tighter, not too much for our risk appetite. Okay, so if you are to filter into the current price, all right, so the criteria number 2 is that the order flow should be in the correct price range. So for here we're looking to sell. All right, so since we are looking for sales, it means that our order flow should be in a premium price. All right, we're looking to sell from the highs to the lows, so order flow should be in the premium price, not in a discount price. So like I said, you can pull up your fib tool and adjust it as price goes to be able to meet up what the valid order flow. So now if we look at this particular impulse to the downside, I'm trying to filter significant pullbacks on this particular impulse. We can see that we have one tiny pullback at the top here, right? This is another flow. We have another order flow here, and then currently we are having order flow here, but then we're not going to mark out this order flow. Why? Because we are looking for order flows that are above 50, because we are looking to sell. So we're looking to sell from above 50, looking to sell from a high price, right? Now if you look at these two order flows that are marked out, this one is actually within the 50 and then above the 50 a little bit. You can see that this order flow is also mitigated. This pullback, this order flow here that is not actually valid, is mitigating this order flow. That means we are erasing this particular guy. It is not a valid order flow because it has not met the criteria of having FVG, which is the last criteria we identified. It doesn't have fair value gap because this particular price movement have come back to mitigate all of it. All right, so let's play price to see how it went. So for me now, since we have identified this guy, I'm going to focus on this guy to be where I'll be looking to take my entry. So this is my order flow, and this is where I'll be looking to take my sell what I do is to take limit orders. I put my limit right there, and then my stop is at the top of the order flow since we're looking to sell, and then target whatever you want to target. I like targeting 1:3 for a quick trade. All right, so we play price, and why I wanted to play price because of all of this live movement. Now you can see that price have played out of our range, right? So we have to also evolve with price as price plays out. That's how you get to filter out the valid order flow. Okay, so let's continue. We play price to see what price will do to our point of interest. So the more price shift away from your point of interest, you try to put your your tool or your 50% rule in check. So now we have this particular order flow right on top of the 50%, right? And I said to us that we can also use another flow on top of the 50%, all right? But if we check other criteria, the order flow is not valid because it has been mitigated by this particular pullback, you see. So this order flow here have been mitigated by this particular pullback, meaning it is not valid. All right, so we just play price and wait, meaning that first order flow, this our small order flow, is still our valid point of interest. So we play price and wait for price to see what price will do. Now price is closer to our point of interest. Okay, so we have to wait to see what price will do. That's our order flow. You can see price mitigated our order flow, and if I was trading 1:3 already, I've taken my profit. And for those of us that will hold price till whenever, you can see what price is actually doing. So this is how powerful order flow is. You can see price have taken profit for what a technical SMC trader bringing trade to this particular level here. And this is actually one of the trade I took on my live account a few days back. So you can see on my screen there, that is the trade. All right, so now we are now on what the next phase. Our first criteria is to identify Breakoff structure. Breakoff structure have been identified. We have to now look at what this impulse that broke structure to identify what a valid pullback that is within our price range and that is not mitigated to get our point of interest from, or our next order flow to sell from. All right, so since we are looking to sell, we're looking for order flow that is higher than what 50 mark. So we are going to draw our field from here to the base, and then we wait. We now identify our order flow. Now if we look at order flows, this is a pullback before the main significant drop. This is the last bullish pullback before the main significant drop. So this is my first order flow here at the extreme. Extreme order flows are very powerful. No matter how tiny, no matter how small they look, they are very, very powerful, because that time price might have collected liquidity from every other people, including small money traders who are looking to trade from maybe any other flow they can find within the price. Okay, so this is like my order flow, right? This is like the only order flow I'm seeing right here. This one is also an order flow, but then you can see this week have come back to mitigate it, so it is invalid. And if I play along, I'm going to have my order right there. Okay, we're going to see what price will do. Whatever price do, remember, if price breaks through it and it's not mitigating anything, you have to evolve. And if price doesn't break through it, you just have to wait patiently for price to come to your order flow. For me, you can see that this particular chart, this is 5-minute chart. This is the time frame that I use for this particular strategy. I don't do anything else. I just look for Breakoff structures and then wait for price to meet my order block criteria, and then I play along with price from there. That's all I do. Very simple. So we have price breaking significantly to the downside. Our order flow is still valid because price have not mitigated any order flow. So if I am to check to see if there are valid order flows before my order flow, I just have to pull it down, and then you can see that we are not having any significant order flow. This is the general pullback. This is a drop, but then you can see if I align it, this small guy have mitigated it. So you have to practice this particular order flow stuff before you put them into practice. All right, if not, it's going to be catastrophic if you just dive straight into trading your live account. So we are moving. We're going to put our order right there, our sell limit, and then stop loss at the top, and then you target whatever you want to target. Price is going to our point of interest. That's how I trade. Price is coming closer. This is like an emotional time. You might be wanting to just dive into the trade, but then you have to make sure that you wait for price to do its thing. This is how the market is. Price will play around with you. Price will pull your legs front and back. Make sure you are strong emotionally to wait. Your work as a trader is to wait, nothing else. So I think this particular trade was on a Friday. Now you can see price have mitigated our point of interest. All right, You can see how price is swimming down after mitigating our point of interest. So this is our point of interest here. Price mitigated. This is what we call sniper entry. Order flow is very nice. You just have to train your mind to master the craft. Okay. You just have to train your mind to master the craft. So you can see price is swimming down. For technical traders, you can put your stop loss at the previous low. For me, I like to take 1:3. I think by now I would have been done with the trade. I was actually holding right now. 1:3 is already 1:5. I've been done and I'm tempted. So this is how order flow works. You just have to identify those criteria, mark out the order flow itself, identify a Breakoff structure, and everything that I just showed to you. This is how the strategy works. It's very simple, it's very precise if you put in the time to understand it. So for those of you who are looking for proper mentorship, proper coaching, one-on-one coaching, trading together with me and all of that, look in the link in the description. I'm going to teach you one-on-one.